Hey traders, Stephen Kwitzel here with thetradersplan.com. It's Thursday, headed into the close. I'm going to try to get through today a little bit quicker than normal. I have live in Central Arkansas. I got a storm coming my way, so I'm going to try to get through this without the sirens going off. But we have a lot to cover today. The market is at a major trend line. It's either going to go one way or the other, and based on the reversal today, it's kind of a positive. It's touching, and we're going to go through that in a second. I also want to show you today an alert system that I use, just a simple way to set up alerts for stocks that you want to enter. It's something that I do. It's part of my weekend routine I do over the weekend. I find a list of stocks that could be setting up, and then I set alerts on them. That way, when they cross the trigger, I'm getting an email alert whether I want to buy it or not, and then I make that decision at that time. So we're going to look at that, and we're going to go through a list of marijuana stocks that I think have the potential to be setting up. I know a lot of people right now are talking about marijuana stocks because Canada is going recreational next week, so I think it's pertinent to address that. But I don't think it makes sense to buy just any marijuana stock. I think you want to really focus on the ones that are setting up. So I'm going to go through a list of those today. After going through about 50 of them, I narrowed down the list to about 8 of what I think are the better setups, and we'll go through that with the alert system as well. So let's really start with let me go to the S&P 500. I want to start the 60-minute chart. Come on. Okay, so you can see right here, this is the 60-minute chart, and this was the nasty sell-off at the end of January or early February. You can see, so really, it's crystal clear, right, that we've just been in a market correction in the trading range. I thought when the S&P 500 cleared this pivot right here of around 2670 that we were headed out of this, but it really just rolled back down and is grinding higher. And now we're going to look at the daily chart here in a second, but we're going to see, I'm glad to see some buying come in on and off the lows. We're going to look at the S&P 500. It's right at the 200-day moving average. So we're really going to see a come to Jesus meeting within the next day or two with Mr. Market. It's either going to head up, or if it heads down, it could pick up some steam very quickly. So the market is at an inflection point, but sometimes it's just important to look at the short term, even though I don't make trading decisions off the short term. But, you know, closing support for the S&P 500 continues to hold the 2560 area, and on this most recent grind lower, we haven't made it to that point yet, but hopefully if we get down to that point, it will continue to find support. Although, you know, I once heard somebody say double bottoms work, but you haven't heard too many triple bottoms that work. So if it comes down there, that would be your triple bottom. Now, I'm one that I try to have an upward bias, a slightly bullish bias, just because the market has a slightly bullish bias over time, has an upward trajectory over time. So I try to keep that mentality because there's so much on the news that could give us, you know, reasons on why the market should go down, but yet it continues to climb a wall of worry. So until it breaks or until the fat lady sings, I'm not going to scream the sky is falling, but it's definitely something worth noting and something worth paying attention to. Let's, actually I don't want to start with the NASDAQ. I want to start with the S&P 500. So this is the 2560 support line. This is the daily chart of the S&P 500. I think this is a good representation of the overall market. You have, you know, closing support at 2560, which we just saw on the 60-minute chart. Now you have the red line, the 200-day moving average. You can see it sliced below it this morning, really undercut it, and is coming back. We'll see where it finishes the end of the day, which I think is important, but if it rolls back down, I think it could quickly pick up momentum to the downside. So if you look at this, this is a descending triangle, which is typically a bearish continuation pattern. So we'll just have to wait and see. You know, you can see that 2 or 3 good days and the market could break out of this downtrend, the S&P 500. really one day to the downside. I would really say if, tomorrow, Friday, undercuts Thursday's low or closes below it, boy, I would really be careful. Now is the time that you have to have your stops in place, and you have to keep your powder dry. I don't think if you're finding a lot of frustration in this market and can't figure it out, that's a time when you need to keep some cash. And one thing I always learn, and I still follow IBD, I think they're phenomenal at their market research, but cash is a position. So you want to keep in mind that the market, most of your money is going to be made in any given year in just only 2 to 3 months out of the year. So if only 2 to 3 months out of the year is where your money is going to be made, where most people are going to make money, the other 9, you better have good money management rules in place to make sure that you're not getting chopped up and spit out, death by 1,000 cuts kind of trade. And again, that's another kind of IBD verse that I keep hearing them say, but I think they are very good at, following distribution days. And if we look down here, I'm going to say support is going to hold until it doesn't, right? Because as you have to say, you're at this trend line right here. I think it's unfair to say that, oh, it's just going to crack wide open, but we have to take note that this is a descending triangle, which is typically a bearish continuation pattern, but the 2560 continues to hold, and we touched 2594. We didn't get down to 2560 today. We got close. So we're probably 1 day away from the downside or 2 to 3 days away from the upside. Either way, you probably should just sit tight for a few days until that takes shape. I wouldn't try to pick a bottom or it's not about picking the exact bottom, getting in at the best price. It's about getting in the right price, the price that puts the odds in your favor of making money. And sometimes just when the odds aren't in your favor, you need to trim your positions down, your sizes down, your cash needs to be definitely a position that's being held. And the positions that are working, like I have a really good position right now, or the members have a really good position right now. It's up 30%, and it's been up really, I think we bought it right on this day, or on one of these days, and it's up 30%, and the market has done nothing. So with me, that stock is fine. It's outperforming the market, but if it cracks wide open, I'll probably take some. If the market cracks wide open, I'll continue to take some more profit. But I would just chill for a few more days. I know the hardest thing when you're trading stocks or when you're analyzing the market, the hardest thing for most individuals is to do nothing, right? Patience. You have to keep in mind, and we're going to look at some corrections here in a second. Corrections can last months. Bear markets can last even longer. They wear you out mentally and physically. But if you're not trading a lot and you're not losing a lot, then it shouldn't be wearing you out too much, right? You just have to accept at this point that anything can happen in the market. Don't try to analyze, the why. Why is the market correcting? Why has the market not made a new high? Why is the market sitting right here? Don't ever focus on the why, because it'll drive you crazy, and the market's going to do what the market's going to do. So try to be a reactor. Try to just follow the trend whichever way it's going, and if there is no trend, take a step back, raise some cash, and just sit on the sidelines for a minute until a better day is approaching us. So if we look, I just like to go back to look at corrections sometimes just to see that how long and ugly they can be right here. I mean, this was a correction. This wasn't even this is 2010. This wasn't even this was like a 13% correction, I think. Wasn't even a bear market. It was just a correction, but geez, I mean, it almost looks similar. I kind of see if I could draw a descending triangle right here if I probably wanted to, and then it ended up breaking out, not down. So, but it just wore you out. It broke above this pivot. You can see right here, this little double bottom broke above it and rolled over. Came back, broke this pivot. I couldn't get any traction, rolled over. Then, third time's a charm, this follow-through day right here, I can see it clear as day. boy, look at that trend. Little pullback. Oh man, there's just lots of money to be made coming out of correction. So I just can't stress enough. And you'll live longer. Your blood pressure will be better. Not to worry too much. Just make sure you're not over trading, because again, your money for the year is going to be made on these moves. Your money is not going to be made nickel and diming. I mean, at best, you're probably going to break even coming out of here, but just the odds are not great. So you want to put the odds in your favor. 2011 correction. This was nasty. This right here. I'll call the correction. We'll just start it. Let's just start it from here to right here. I don't think it really matters, but 126 periods. Man, that's 5-6 months right there. That's 5-6 months of heartache. So, excuse me, again, just keep in mind, it's just like there is a lot of a whipsaw at the bottom of a correction. So, but look, then you got the reversal, then you got the reversal, and then you come out, you make a little money on the trend, rolls back over, scares, makes everybody think the sky is falling, and it just, boom, it takes, when you come out of something nasty, these pullbacks, these shakeouts are very common. You almost have to anticipate them, because you're coming out of a lot of volatility. You have to keep in mind that it takes a minute for the market to find its footing coming out of these type of corrections. And then we probably all remember this, just the 2015. I think this up here, this trading range right here, in 2015 was worse than the correction, because I have no problem sitting this out. But, when just the market is just whipsawing around, you had a double bottom breakout, you had a nice trend, so you made some money, and then it just rolled over. Again, this was actually probably a little bit easier to play because the chop at the bottom wasn't that long. But again, you have rules to get in, you have rules to get out. Unfortunately, the market doesn't go straight up. So if we look at the S&P 500 weekly chart, this is going all the way back to 2009. I mean, it's a pretty good trend line right here. You got 1, 2, 3 corrections along the way. Everything else is a pullback. Maybe you say one of these was a bear market because small caps was down 20% or NASDAQ was down 20%. But either way, it's not even at the bottom of this trend line, which that would be basically another 10% if it came down and touched this trend line, which that would be a bear market, because we're already in a 10% correction. If it went another 10%, we would be in a bear market. But keep in mind, these last 3 corrections came down and touched the trend line. I'm not saying that's going to happen. I'm just saying that this is a pretty good range right here, and a pretty good point. You can see right here when 2013, 2014, it was in the top of the range, and then you can have times where it's in the bottom half. But it's funny because this is a weekly chart, and you look at that chart, and if you take all the annotations off it and didn't know what it was, you would say, well, that's not a bad chart. It doesn't look that bad. But when you're in the heat of the battle, when you're in this chop, it really sucks. So sometimes looking at a weekly chart is a lot better, putting things into perspective. So you have the NASDAQ right here. It's trying to reverse, but it needs to. I mean, if I were to draw a trend line, let's just kind of look at this for a second. I mean, it needs to break through that, I think, and break above that. So it's got some work to do. It needs to NASDAQ probably needs to break above 7,200 for me to think that we can get out of this. But again, look, every time it came somewhat close to the 200-day moving average, it has held. So with that being said, I tend to, if it's held, the big trend is still up, you kind of have to stick with it until it's no longer your friend. So the NASDAQ, but the S&P 500 had a descending triangle. The NASDAQ kind of looks like a head and shoulders. You got shoulder, head, another shoulder, probably a really good neckline that goes right across here. So it's just, it sucks, but reversals are good, but you just have to be patient because we're just in, just one of the corrections. Let's look at the S&P 500 rep. Even though it lags a little bit, I'm okay with that because I'm trying to look at the big picture. Let's focus down here. This is the percentage of stocks above the 200-day moving average. We're in correction mode. We haven't really been below 40% since the 2015 correction, which is interesting because we had a really nasty sell-off in the S&P 500 right here, and it barely took us down to 50%. Of stocks above the 200-day moving average. We're still right around 50%, but we haven't dipped down here yet. So, basically, from a breadth standpoint, this correction was worse than this correction. Now, I'm not hoping that they go up against each other to see which one is worse. But so far, we really haven't entered that bear market breadth territory, but we are clearly in correction breadth territory. But if you look at the percentage of the S&P stocks above the 50-day moving average, the 20-day moving average, they're getting weaker. I don't typically follow these as much just because I don't like things that give me too many signals. Because with too many signals, you have a lot of whipsaws. I try to go for the bigger trends, which is why I look at this just to see what kind of broad participation we have. And right now, 50%, it's still okay, but clearly it's just kind of him-hawing around. So right now, correction territory. Let's go to the CRB2. So this is really interesting. You have, and I always bring this up, you have the dollar and the CRB. They're inversely correlated. The dollar is larging and charging, headed the other way. Broke out of a downtrend. We're going to look at that for a second. But the interesting thing is when they have such an inverse relationship, typically that'll push down commodities if the dollar's headed up. The dollar is not headed, or the dollar's headed up. Commodities are not headed down. You can see they're trading tight down here. And if I blow that up for a second, maybe you can see that. So what does that mean? Well, it could mean that this is a counter trend rally, right? That this is not a new uptrend. This is just a counter trend rally, just like we had here, and then we'll get a continuation. But it also could mean, keep in mind, just because the dollar's heading up doesn't mean you have to sell or short your commodities. Focus on the trends of the individual commodities that you're trading, because a lot of times these relationships can decouple from each other. That means their typical inverse relationship will not hold for a couple weeks or even a couple years at a time. So, gold's hanging in there and the dollar's going up. You would think gold would just crack wide open. But it hasn't yet, or at least gold miners haven't yet. So again, it is causing some confusion, but and I keep coming back to, well, maybe that means the commodity market is smarter and this is just a counter trend rally, but right now this is holding. So I don't really see, if you have something that's working in oil or something like that, maybe you raise your stops, but I don't see a reason to just sell everything oil or gold or whatever you own just because the dollar is headed higher. Wait a minute. No, that's not the one I wanted to do. Yeah. Okay, so the USD, this is the weekly chart, broke out of the downtrend clear as day, broke out of that downtrend, broke out of that downtrend. For me, what I would have to say for the dollar to be in a new bull market is this needs to kind of create a little consolidation, a retracement, and then clear the pivot, kind of create a new base, that first stage base, and clear that pivot for the dollar to really confirm to me that this is more than a counter trend rally. You can see that the S&P 500 it broke out relative to emerging markets. So it peaked with the dollar, meaning the S&P 500 has been underperforming emerging markets, and then now just broke out. So right there, that's telling me that, okay, maybe this relationship holds true. Typically, U.S. stocks outperform when the dollar is strong and vice versa. However, you kind of have something interesting happening here. That's emerging markets. This is the S&P 500 versus the international stocks, all world ex US. Looks the same, except for this is rolling over, which is telling me this international ETF is outperforming the S&P 500, at least as of lately. So that's just kind of one maybe question mark right there. But right here, small cap leadership follows the dollar. That's clear as day. When the dollar's headed up, it typically means small caps are going to outperform the large caps. So everything is looking right, but again, I need to see a retracement, a base, a consolidation, something, and a breakout for me to say, okay, now we're clearly coming out of that. Okay, something interesting with the SM. This is the relative chart, S&P 500 versus the CRB, right? So when this is moving up, it means the S&P 500 is outperforming. When it's moving down, it means commodities are outperforming. Really, so you have this line right here. Since the beginning of 2018, this is a very long-term chart. Since the beginning of 18, commodities have been outperforming because the line's going down. So if you look at this uptrend, so the S&P 500 has smoked, just absolutely smoked commodities since November of 2011, right? Not even close, 110% to negative 38. Well, now what is interesting to me is when you have these little pullbacks, little pivots, typically if you look at this, the next pivot doesn't undercut the previous one. And it did right here. So you have this little pullback and then an undercut, which is telling me that we're definitely open to a leadership change for a longer period of time. I'm not going to say it's going to happen yet. You could draw a trend line right here, but you definitely need to be open to it because just looking at the chart here is telling me that leadership change is probably happening. We're getting in that inflationary environment, and this is a long-term chart, but when that leadership changes, you want to be in the one that's strong because you can see right here from 1990 to 99, S&P 500 was clearly up over commodities, 266% to negative 19, 10-year period or 9-year period. Then commodities took hold at the peak to 2011 for about 12 years. The CRB outperformed 69% to negative 8%, and then they flipped again. So this to me just proves, and I'll tell you this, I don't think you should long-term hold commodities, like especially just the metals, because they have no utility, they have no earnings. Maybe you know, an MLP dividend-paying type of ETF that pays 8%, sure, but commodities can be out of favor for decades, and I don't think you want to be sitting with a dead weight part of your portfolio. You might as well throw up a relative ratio chart just to look at the trend. And you want to put more money, if not all your money. I'm not saying, you know, all, but focus on the stronger one. If we kind of flip this, actually, let me kind of copy that over here. But let me do something. Kind of just look at a different chart for a second. Okay, I'm gonna make this prettier. So give me 1 minute, line. So we don't need all these moving averages, it's not necessary. Okay, let's see what that does. Okay, so you have the CRB relative to the S&P 500. So when it's going down, it means S&P 500 is outperforming. When it's going up, CRB is outperforming. So now you're starting to change gears here a little bit on just this chart, where it's looking like it broke out of this base right here. And I saw this chart with Martin Prane on stock charts. Broke this base right here. It's a little first stage, if you want to call it a first stage, but it is a relative ratio chart. And then you can draw a pretty nice trend line right here. So I'd say a couple months ago, you really have this relative ratio breaking trend lines where the CRB is outperforming the S&P 500. So it's worth noting that before you go start shorting commodities because the dollar is strong, that you probably should pay attention to these. So we're getting closer to the close, and I really hope this holds right here, that the market does not come back and retouch the lows and just sells off in the final hour. But I want to show you a little alert system that I use, and I'm going to show you how to use it. If you're a member of Stock Charts, you can use Stock Charts, but just about any broker you use does have some kind of alert service. So with the Canada going recreational next week, everyone's talking about marijuana stocks. You know, I'm looking at, I mean, if we just, and I have some alerts right here, but here, let me pull up a different chart. if we just look at the marijuana ETF, man, it's in a pretty nasty downtrend. It needs to break out of this. I mean, you could draw a steep trend line right here if you wanted to. That's pretty steep. You know, I might be more interested in drawing it right here. But to me, you don't want to buy marijuana stocks. There are some that are on the cusp of building the right side of that base, right? That, you know, you had a surge off the bottom, a retracement. You want to make sure that you buy at a key pivotal point where you're not buying, giving it plenty of room to the downside if it doesn't work. You kind of want to, at least how I do it, is I pay a couple extra points for it to clear a little pivot in what I think is a consolidation, which would give me extra confirmation that I think that the uptrend is going to work. And this ETF is just a very simple example. So what I typically do is, you know, every weekend I find the strongest growth stocks, and I would not say this is strong by any means, but we're just using this as an example. And you're looking for a pullback, but you don't want to buy when it clears this pivot and comes all the way up here because you're buying too late. But a lot of times what will happen is it'll surge off, you know, it'll go in an uptrend, then it'll pull back, it'll try to build a cup. But in the middle of that cup, it might have a couple of up days and then it'll fall back down to continue to build that cup. Where I like to place my alerts is, you know, a point or two above the middle of that cup. Right where it tried to move and didn't. I don't really want to buy in here because it could just easily roll back down because this isn't a downtrend. But if it moves higher out of here, that gives me a lot of and crosses this level, gives me a lot of confirmation or extra confidence that the trade is going to work. So, because I'm getting it on the way up, not on the way down, or not while it's going sideways, because it could go sideways for months. I don't want to sit through that. So let's go look at some of my alerts that I put. Actually, let me, So I went through this. I got this chart pack from here. We'll start back here. So I got this chart pack from Greg Schnell a few months ago, and it's just, you know, a bunch of marijuana stocks. Okay. So he just kind of uploaded them. He's a commentator at Stock Chart. So, you know, he uploaded 40 charts or so, whatever. So yesterday I was looking through here and I'm like, okay, you don't just want to buy any marijuana stock because not all these charts are looking pretty. So I said, okay, which technical setups do I like the best? And then I went through and set those alerts to find the trigger of where I thought they should move across to confirm a move up. So let's just look at some of these charts, for example. This is good. So this Aurora Cannabis, right? This kind of looks like the ETF, like had a big surge up and now is on the cusp of this downtrend right here. If I drew a downtrend line, it'd be right here. So it's at the long-term moving average. So I'm trying to pick a point where I say, okay, I don't want to buy it while it's sitting on this. I want to buy as it just starts to perk up, as the stock starts to wake up. So I saw this point yesterday of 640. You can see it got to the high of 640, and I might just try to blow this up a little bit. Okay, so surged off the bottom just like the ETF and is pulling back to support, and now it's likely building a cup. Okay, it popped to 640 in the middle of it. Now I want to wait for 641, 642, 643. I want to wait for a clear break above that and then jump on it. I don't want to buy it while it's going sideways because you don't know how long it's going to go sideways for. I'd rather pay 1 or 2 extra % and wait for the clear signal that it is trying to build the right side of the base. So I have an alert set on this stock at 641. And if it moves above 641, I'm going to, get an alert and I can make the decision where I want to buy it or not. There are some stocks that I will go ahead and put a buy alert on it with once they clear a certain point, if I think they're going to move so quickly that I could miss it. So I'll just put a buy stop alert on it, which means if it clears this pivot, whatever pivot I say, it's going to automatically purchase it. I don't really want to do that with these marijuana stocks, but that is something that I have done, and it works really, really well in the right environment. So this this Canadian Cannabis Corp right here, this is another example. So I'm looking at this. It made a nice move on the up. If you can see right here, lots of accumulation on this triple. This is a penny stock. Some of these aren't, some of these are, but these stocks aren't profitable. So now I'm looking, you could buy the pullback right here. Again, I'd rather wait for the leg up just because it could go sideways and it could roll over. But if it clears this 55, so I got an alert on it at 56 cents, it's going to email me when it's moving up for its next leg up. I'm going to jump on it if I decide to. But again, I'm looking for a point in the middle of the consolidation that can give me enough confidence. So I have an alert on this at 56 cents. What's the other one? CGRW. Okay, so again, you know, if people were buying these marijuana stocks a couple weeks ago just because Canada was going wreck, they're probably in the red right now because the move hasn't happened yet. So with something like this, you know, I might say, okay, you could pick this 139 pivot, right? Again, because this could break tomorrow, and you just got stopped out. Hopefully you're not writing it down. So you could pick, which I believe I picked this 150 pivot right here. To alert me, because that to me is a really good point that this is building the right side of the cup. I don't really want to necessarily buy the pullbacks on these just because they're so volatile, and I don't know how far it's going to go. I'd rather catch it on the up, because if you catch it at the right point, you can still make some pretty good money. So again, I'm catching it on the way up, early on the way up, and I'm still buying within the pullback. I'm just not just buying when it's pulling back just to buy it, right? I think that I'm putting the odds in my favor. Let's see, NAB. Okay, so here's another one. Again, if you notice that a lot of these stocks, they all look similar because they're moving together. They're all in pretty good downtrend, surged off the bottom, just like the MJ ETF we just looked at. But this is starting to break, it looks like, the 20-day moving average, so that's not a very strong trend, but you could easily say, okay, I got two pivots right here, 110 and 112. I alerted this for 114, so I want to make sure that, you know, you could call this right here a little cup with handle. I wouldn't call it a great cup with handle, but you could call it that, or you could just draw a downtrend line right here. But either way, you want to find a point that gives you enough confidence that you think it's building the right side of that consolidation. So for me, it was 114, a couple points above each one of these pivots, and I'll catch it on the way up. FRLF. Is that right? Yep. Okay. So again, you know, and these were the setups that I thought had the potential to move higher, that were building flags or that were building consolidations off the low. All those other stocks I was looking at, the setups weren't for me. I'll just put it that way. But again, you have a pullback right here. It looks like could be a cup consolidation. You know, let's just draw that. So it's kind of how I envision it. And then I'm waiting for it to clear the middle of that. So 18 cents right here, because I want to catch it before it clears the high pivot, somewhere in the middle with enough confidence. So I'm kind of catching it as it's coming out of the low pivot, because once you catch it out of the high pivot, prone to shake you out. So it can just punch through like that, and it'll come back And let me get down here, kind of retest it. I want to catch it while it's all the way up here so I can sell into that breakout, my first target, and then raise the stop to break even and hopefully ride it out a little bit. LXRP. Okay, so on this one, and this one, it definitely broke out of its downtrend. It kind of created a little mini pattern right here. It doesn't really have a cup right here. So I would, for me on this one, because it hasn't really consolidated, I have it at 166, but because I want to catch it on the way up, not on the way down, because on the way down, I mean, it's down 5% today. That's about as much as I like to risk on any position. Yeah, it's probably coming down to this 20-day moving average, the way it's looking, like it wants to pull in. So 166, but again, you might just kind of put it on your watch list to consolidate it a little bit. If we go to, let me kind of go to this last one that I think could be the leader. Whoops. Now, I say the leader because a lot of these stocks, they're high. None of them are profitable, or if any of them are profitable. That's why they're all trading on the over-the-counter. But, I read an article, this Kush Bottles, they do have pretty good revenue growth, and it's looking all right. It already broke out of this downtrend, or is trying to break out of this downtrend right now. Looking at it, you can see, so what I like to see is I like to see a pop on earnings, which happened right here. Pull back on light volume, which happened, and then it started to pop again. So someone is stepping in and accumulating this stock as it's trying to break out of this downtrend. So, maybe this alert, since you got two 580 pivots right here, maybe this alert's set at 581. So I think it's important to know that you just don't want to get caught up in the hype, and you want to find a place on the chart that makes sense. Because to me, these marijuana stocks, I don't really think any of them, are profitable, fundamentally just awesome. I mean, there's better stuff on the market than buying a bunch of these marijuana stocks. So you really want to make sure you're buying these positions on a technically reasonable place on the chart. And as always, have stops in place, because, something that goes from 182 to 850, man, that can go right back down to 180. And that's a very, very big loss. So I hope this was helpful. I think the alert system has really helped me, and especially when stocks start to move. That way you don't have to pay attention to them 24/7. I can just get an email alert. A stock has crossed a certain level. Then I go look at it. And a lot of times what happens is when I get that alert, I'll go look at it. If the volume is there, I might pounce. And I like the market conditions, I might pounce. So I hope this was helpful. Let me know if you have any questions. If you haven't taken a trial, please, to the Trader's Plan, please do so. Join us. We are making money in this correction right now. We're actually doing very well, outperforming the market. So take a trial, check it out, and I'll see you on the inside.